TJ the Wheel Deal coming at you live. It is Tuesday, April the 15th, tax day, baby. 10:01 a.m. Central Time, Texas time. Type in taxes suck if that's the way you feel right now. Because that was like a lot of shit going through my mind yesterday whenever I was starting the process of taxes. Because it ain't going to be done by today. I always have the extensions ready to rock and roll. But there's just crazy shit that goes through my head when it comes to these taxes. Like, for instance, if there was a way that I didn't have to pay taxes on all the money I made, and I wasn't maybe like able to vote anymore. I wasn't qualified for a check when I was like 62 and a half or whatever. Like all of those things, like I'd probably do it. Like I'd probably do it. Type in me too. Me too, if that's kind of like the way that you feel about this thing. Or for why I gotta give you guys so much money, and the only thing the country has to show for it is $37 trillion in debt. You know, like, this shit is crazy. Like, it is absolutely crazy that they hold us to such a high standard individually, but who holds the government accountable for freaking screwing up the books for years and years and years? And we have this $37 trillion burden that at some point gets passed on to our kids and their kids. And eventually the company, the country is, will be on the verge of bankruptcy probably in 1 or 2 generations. Because at some point people are going to get hip to the game and they're going to realize that this money isn't worth the paper it's printed on. It's a credit note. It's a note. So anyway, yeah, taxes got me feeling not very American right now. I'm not feeling very patriotic right now. Anyway, we're waiting on Uzi. I reached out to Uzi, see if he's going to be joining us. He missed last week. He had an obligation. Hopefully he's able to join us this week. If not, we'll take a look at the charts real quick, real basic. We'll look at the charts. I'll put everything on year to day, put in the moving averages or the Bollinger Bands, and then we'll just see if the situation looks bullish or bearish and, kind of go from there. But before we do that, let's do a portfolio update. So what I'm going to do is I'm going to put myself over here. There's the kaleidoscope action. And I'm going to put this guy over here. Hopefully you guys can see it. And then I'm going to make it a little bit bigger there because this thing's just not very photogenic. So I'm looking for different ways to display the data. That way, it's a little easier for y'all to follow. So we're just going to start from the top bottom to the top down. So I can do this right here, and then it shows y'all all the positions. That's very, very busy. So we're going to go one at a time. So we're going to start with Amazon. What's going on with Amazon? There is 10,000 shares owned on Amazon. So I'm highlighting these as we go. So there's 10,000 shares owned at $203.15. It's currently going for $181. So the P&L for the day is 11,000. The P&L open, profit and loss open, is 21,000 to the no bueno, or down 10%. Year to date is 385,000 to the no bueno. So that's what's going on with Amazon. Then we got CleanSpark. There's no shares owned on CleanSpark. I've got a strangle going whereby I sold 2,000 cash secured puts at $6 and 2,000. It says technically it's cover calls, but they're really naked calls because you don't own the shares. So it's a strangle. It's not really a covered strangle because you don't own the shares, but it's a strangle nonetheless, where you sell the puts and the calls for the same day. So I've got these for sale 30 days from now or so. Yeah, 31 days from now on May the 16th. And if we look at them individually, the $6 cash secured puts, they're approaching break even. We had a volatility expansion when I first sold these, and also CleanSpark came down because it was probably in the $8 range when I sold these. So this thing was down a lot, but data's done its thing. The volatility's come down a little bit, and now we're we're kind of okay. And then the calls are printing because we've got, excuse me, somebody's blowing up my phone over here. So we've got the $11 calls that are printing at 45%. So that part's good. So we got a nice big sweet spot there of $6.01 to $10.99. So that's what's going on with CleanSpark. We're trying to milk this thing. There's still a lot of extrinsic value on the cash secure puts. There's 58,000 on the calls. There's 24,000. In phase, this is a strangle that I sold last week, not too long ago. And here it says 1 day. It's because I just adjusted the cash secured put. So essentially, we've got a big sweet spot of 45 to 65. So we've got the cash secured puts at $45, and we've got the calls at $65, and we're down on both of those. There's 31 days out. Obviously, it's mathematically impossible to be losing both of those on expiration date, because it's going to have to pick something. It's either going to be below 45, it's going to be above 65. If it's in the middle, that's the sweet spot. We win both sides of that trade. We'll obviously manage the side that's going against us. Him, same thing, sold the strangle, 22 and 39. This is going to say 1 day out because I had a lower strike price on the cash secured put. I increased it to take pressure off of the covered call positions. We got 22 to 39 is the sweet spot, and it's at 28.50. So things are looking pretty good. We're just going to kind of milk it. Same thing on hood. We got a strangle. We got a sweet spot of 33 to 50. So 33 is the cash secured put. 50 is a call. Y'all are seeing the theme there. Same expiration date, same number of contracts, 25. We're picking up some pretty good money here. We're making money on the cash secured puts, and we're down on the calls because hood's been steadily matriculating up. And if the calls keep going under pressure, then I'll keep increasing the strike price on the cash secured puts and logging in some credits that way. And eventually I'll increase the strike price on the call side, and I can always roll these things out a month and, just kind of play the game. Riot, what's going on with Riot? I've got 1,000 cash secured puts at $7, and I've got calls and even naked calls, technically, because there's 150,000 shares owned. So we got all the shares for sale at $10 a month from now, and then I'm selling calls against these cash secured puts as well. So kind of running a strangle there too, and things are going okay on the call side of things. The cash secured puts are under pressure, so I've already got a potential roll a month out, same strike price, pick up another $28,000 to $30,000. Just kind of let it stew a little bit. We'll see what happens, but I'm also okay just taking ownership of Riot at $7. It'll lower the average down a little bit because there's 150,000 shares owned at $8.51, as you guys can see right there. So that's what's going on with that in a nutshell. Let me check in with you guys a little bit. Make sure you guys are able to see all of that. There we go. Hey, Uzi, how are you?
TJ, how you doing, man?
Good. 1 second, Uzi. 1 second.
Yeah, my bad. I was running a little bit late there, and I just got to my desk, back to my desk.
Sorry about that. That was my mother-in-law. She pocket dialed me. Anyway, let me finish the portfolio update real quickly, Uzi, and then we'll get started.
Yeah. Sounds good.
Let me know if you guys are able to see that. Are y'all able to see the screen a little bit larger than normal, or not really? It's all about the same. Because one other thing because I'm trying to see how to make this a little bit more legible for the folks. So the other thing that I've considered doing, Uzi, is when I share the screen, I could just do this right here, like this.
Okay. Nice.
And then I put it here, and it theoretically would make the screen a little bit bigger because we're not. Is that a little bit better?
It is. Yeah, it is.
Okay, super. So anyway, that's what's going on with Riot. And SMCI is another strangle. These are technically called short strangles, where you sell the put and the call for the same expiration dates. So I've got 25 contracts at 28 and 35. So I've got a pretty big spread there. If it comes down, I'll lower the cash secured put. If it goes up, I'll increase the cash secured put, and you're just toggling. essentially, and you try to find the sweet spot. And on this one, I found the sweet spot where I'm winning the cash secured put and the cover call simultaneously, and that's what we're looking for. SoFi, what's going on with SoFi? We've got a bunch of calls. These are technically naked calls at 15 for May the 16th. Those are printing pretty good. And then we've got these leap puts that I sold at $10. Those are starting to do okay, up a cool 94,000 on those. And then the leaps that I bought whenever I sold the shares, those are not doing too well, but we're only down 8% on those. So it's a lot less painful to be down on leaps than it is on shares whenever you're talking about 150,000 shares. But this is a lot of leaps, 3,000. Keep in mind that's also an eroding asset. So every day is costing me money to be in that trade. So that's why it's important for me to continue to sell calls against these leaps. And I also have the cash secured puts on in the distance to kind of like help me out as well. So it's just, I'm strangling the shit out of SoFi. Tesla, this is the riskiest position that I have on because of the way that I'm playing it. So we've got the shares owned at 261. They're currently at 255. So down a little bit on the shares, down a lot since the beginning of the year, 644,000 on Tesla because there's been a massive pullback from Tesla. And then I've got some covered calls against these shares at $275 for May this 30 or May the 16th. And then I've got the naked calls, 470 of those at 300. So I've got to watch those. I'm up on them right now, which is great, but this thing could go south very, very quickly. So whenever I have naked calls on, guys, I'm just looking for 50%. If I can get away with 50%, let me reassess. Let me wait for a pump, and then I'd be more comfortable with these things were like at 325 or 350, because then I've got a real big fat sweet spot there. And then I've got the leap puts that I sold in the distance to backstop trades at 175 and 200, 470 of those contracts collectively. So that's why I felt comfortable selling the naked calls to that amount of money. And then the other position that I have that's going to help me against the naked calls getting out of control is I want to make a lot of money on TSLL. So I've got a strangle going. I've got 25,000 shares. Then I've also got an agreement to buy a lot more shares at 25,000 more, I guess, at $5. And then I've got the shares for sale at $10, 31 days from now, and just kind of trying to find that sweet spot. And I'm also okay getting these shares called away so that I can log a win, so that if I need to deal with these Tesla calls and even take on some debits, like I'm okay with it because I've got the money from all of the cash secured puts and all of the money that I'm hoping to make on TSLL. Eventually, I want to have 100,000 shares of TSLL, just waiting on the pullback. Don't know when it's going to happen. So that's what's going on with the portfolio in a nutshell. Let me get over here with UZI. There we go. How's it going, my man?
Going all right, TJ. How about yourself?
Man, I'm doing well, dude. I'm doing well. I'm really digging the short strangle. I'm really liking, selling the put, selling the call, and then you're just kind of playing a game of seesaw, right? like if it goes up, okay, increase the strike price on the call, even if you have to do so for a debit where you're going to get a credit from rolling up the cash secured put, and just kind of playing that game. And then when things start getting a little bit out of hand, well, then just kick the can down the road a whole month, and eventually you're just you're essentially just playing for a consolidation, right? You're essentially playing for whenever the stock flatlines, wherever it flatlines, and the call's under pressure. That means the puts printed money. So that's where you have to get real aggressive, and you got to find how you're comfortable playing them. Like option plays him very tight, right? Like he's going to maximize his credits, where I'm like real like conservative with like 15 and 20 deltas on both sides. Mm-hmm. And he's probably more like trying to get 30 and 40 deltas on both sides initially, and then he makes the adjustments. But I feel like that kind of creates a scenario where I have to like over trade a little bit. So I try to find like a pretty wide sweet spot whenever I sell the strangle. And then I kind of just let data do its thing for a week or two before I have to like really start managing the position. How do you play? How do you play the strangles? Is that a tool that's in your arsenal, or
Oh,
is
yeah.
that not really a go-to move?
Sorry, my cat just jumped up. Yeah, no, strangles are probably the most common trade that I put on, and
Hmm.
I'm more along the lines of where you fall in. I don't like to go too close. You do have to you have to manage a lot more, and then you have the chance of getting run over. To be honest, so I
Yeah,
don't go high delta at all. I don't just go by delta, but when I look at the delta that I'm choosing, it's never above 25, and it's usually in the 15 to 20 range, depending on the, how it really depends on what the beta of the stock or the ETF is. If it's a
sure.
high beta, that means it can move a lot more. So I'm going to go a little bit lower delta, give it more room to wiggle around. But I definitely fall closer to your way of doing it than option. I know option does well with that, but you do have to, be on your toes, and then hope that you don't get run over on a a news announcement or some type of um, positive or negative effect. It could be a negative news announcements too, and then it falls down against you. It's always easier to roll puts than calls, usually. But yeah, I love strangles. Like I said, probably my number one type of trade.
Yeah,
And you just letting theta do its job. And I typically close each side independently. Um,
me too.
yeah, this way you can actually put it on sometimes again if you get the move that you're looking for. Let's say where you can close one side and then you get the stock doing its up and down, just bouncing around. You can put that
Well,
position.
I say that I close one side, but really what I'm looking to do ultimately is close the call because that's really an unlimited risk.
Right.
Whereas whenever you sell the cash secured put, you know what you're going to pay for the stock, right? So
Exactly.
that's why selling a cash secured put psychologically is easier because it's if it's whatever your strike price is at 30 and the stock trades at 20, you're like, okay, I'm down $10. I've accepted that because I've been doing cash secured puts for a while.
Mm-hmm.
But you don't know where the pain's going to stop on the other side, right? So
100%.
to me, it's a lot easier to manage a cash secured put gone bad than a covered call or a naked call gone bad. And I think sometimes it might just be easier to book the loss on the call side and increase your strike price on the cash secured put and just go play there until you find some consolidation.
100%. Now, sometimes if you're really concerned about the stock going higher, instead of putting on the naked call, you can put on a
Call
call
debit,
credit
call credit
spread.
spread.
Yeah, this way you can actually get long and then make up for it if it's a big enough move too. I don't do that a lot, but it's an idea to consider if you're really concerned. Hey, this thing really could move up. Let me not just sell these calls. Let me sell a call credit spread. So yeah, just there's
So
always that's the beauty of options. There's so many ways to play the game on a stock and protect yourself if that's something you're looking to do it when alongside of just bringing in some premium.
absolutely. So let's bring up a couple of these from the technical perspective. So we've got end phase. I've got a cash secured put at 45, and I've got a covered call at 65. So it's a pretty big range, right? We're talking about 20 points here. So if you want to pull up end phase on there and see
Yeah.
what the charts are telling you. Now I did manage to get this thing going as well while you're loading up your guns over there.
Okay.
I do have this is a stock analysis. So when I look at a chart for the very first time, and while Uzi's pulling up his stuff over there, it's the very first thing that I always do, guys. When I'm looking at a chart, is I just put it on year to date. That's my go-to move, like always. And I like my candles on the 1 day, or I'll even go 1 week if I want to just make it nice and clean. And I like candles. Some people like the bars. You got to do whatever works for you. That's just very subjective. Some people just like a flat line as well. Some people just want to be able to do that. Sometimes people like it all colored in too. So it's just you gotta do the one that works for you. The people that are like real nerdy like Uzi, they want certain types of candles because they're also like studying wicks and stuff. So you have to do what's good for you. But to me, I always put on a real basic year to date. Why is that important for me? Because I can look at the first part of the year and where it's at right now is trending down, and it's really that simple. Like for me, I always keep it simple. But anyway, Uzi, take it away, my man. We'll go from I think we might have lost Uzi. There we go. Let's go. Let me know whenever you're ready to present, brother, and we'll go from there. And then I think that's in phase. Yeah, that's in phase on the screen.
Yep, just gonna pull up my screen right now.
And if we look at the year, this has been a rough one with end phase. Look at this thing was just crazy. Like you would go here 3 years even. This thing was nuts back in the day. Did all the way over 300 and something when me, Kevin, and Carlos and Vitaly were always talking about it as well. And then it just fell from grace, dude. Just absolutely fell from grace. Yep. And essentially it's been consolidating ever since. It's been consolidating for the most part since November of 2023. It went up, came down, and kind of consolidated, and then took another leg down. And it's really trying to find its bearings down here. So these are very, very critical levels that end phase is at right now, in my opinion.
It is, and I'm doing the same thing as you were doing it. I'm looking at the history and where it's been. It's been real high, and it's now real low. So, I mean, I'm actually trying to share. I don't know if it's showing up. Okay, there it is. Yeah. So, I mean, not to be redundant, but I was looking at exactly what you were looking at. So it's come down all the way into the 40 handle now.
Yeah.
And probably who would have thought it when it was in the $300 range, but here we are, and that's the market that we're in. It's definitely unforgiving and a lot of pain along this way if someone is still holding it. But what was your cost basis now on these again, TJ?
So this is a strangle. I sold the 45 put and I sold the 65 call.
Oh, okay, right. 65
for May the 16th. Everything's for May the 16th.
May 16th. So you got about a little over, about a month. Okay. So I'm going to zoom in now, and
I'm looking to manage these in a couple of weeks. I won't let it go there. I'll add another month. You know what I'm saying? Like I'm doing the tasty trade way. So the 30 to 45 day, manage it 21 days out. So the segment that we do next week will be like where I'm like really ready to manage at that point. You follow? I want to make sure that I have plenty of extrinsic value on this thing in case if there's a big move up, because that gives me more time to be able to negotiate with Mr. Market, if you will.
So I'm just analyzing your numbers, so you have a 45 strike put. So you've got a 22 delta, just going to glance at that.
Yeah.
And then you've got a 65 call. So you've got a 22 delta there. So you got 22 deltas running on both sides. I like those deltas. I mean, it's not bad, especially since on this particular chart, it's not acting buck wild. It's definitely in a consolidation zone. So you're getting a great theta burn because it is consolidating. Now on the downside, we don't have much history looking left because this is basically, I think it's at all-time lows. So you're at the mercy of wherever support would kick in if it were to go lower. But you don't have a problem getting assigned at 45 and then wheeling it. So the downside's fine. From a perspective of technicals, let me just throw in a trend line that might help guide you. Well, it's not going to help guide you.
Quickly, whenever you do a trend line, Uzi, for people that don't do this, what do you look? How do you do it? Like walk us through the mindset where you do your little, you take out your little thing where it says trend line, and then you find the starting point and the end point. Like, what are you pointing at? What are you shooting at?
Sure. So doing it for so long, it's kind of cerebral. You know right where to go. But if I had to explain it to someone who's new, let me just erase it for a second.
Yeah.
So I'm looking to see right now on the downside where TJ might run into some difficulty, or not run into difficulty because the price is at an all-time low. So anywhere below 47, 48 is going to be difficulty because we don't know where it would stop.
Right.
But so that you can have a line in the sand visually, if someone were to look at this chart and say, okay, this might be where I would be need to get really concerned, or maybe close this position if you're not familiar with rolling, if you're not someone who likes to roll. The first thing we want to do is we want to acknowledge where the low is. So we see the low point here. And then we want to look to the left and see where can we find some sort of support horizontally. So if I just put my cursor at the low here and then look left, I mean, we can all look together. There is nothing that, there is no price points that touch the trend line horizontally. So we know we have to somewhat draw a trend line that's going to be on a diagonal basis. The next closest swing low, which would be this area here, and a swing low is basically where price was heading in one direction and then reverse course. It doesn't have to reverse course dramatically and turn into a new uptrend, but it's a point where we call it like a pivot, where price stopped going in that direction and it did like a U-turn if you're driving your car. So right here is the next closest pivot or area that I'm talking about. We could do our trend line from here to here, but this is a short distance trend line. Typically, we want to try to draw a little further out to get some type of analysis on a longer time frame where it can connect the dot. Now, there's nothing wrong with connecting this one, but what I would hopefully like to do is to try to find one that's maybe a little bit lower or the next stronger, like a stronger swing low. And I consider this one a stronger swing low because you have a lot more cluster of price action here than you really have here. This was like a 1 or 2 day event. This was a 1 or 2 day event. This was really not a non-event. So this is the area that grabs my eye initially. And so this is where I drew it, but just before when I stopped and restarted. And there's nothing wrong with having multiple trend lines as long as you're aware of what they actually mean to you when you're drawing them. And they're kind of similar anyway, so it's not like it's going to confuse you. But so this is what's called now, to me, the downtrend line, but it's the support trend line. So we have a downtrend line. You can have one coming from up above, like let's say up here, this area here. This area here would be considered like where you can draw a trend line because this is another area where it reached a peak before it turned down again. And if we look at this, this is almost these lines, these two lines I just drew here, this one up top and then this one below, they're almost parallel. They're not a parallel channel, but it creates a channel where price has been confined within. So this is a descending trend line up above, a descending trend line down below, but together it creates a channel. So we see what price is bouncing back and forth within it. So this gives it now a trader a good indication of where price might stay within as it continues to trend to the right. It's heading to the down and to the right, so it's still in a downtrend. So looking up above, we can see where price would be constrained if price were to try to go higher. And if I bring my cursor there, it's pretty ironic that this downtrend line is corresponding in confluence with the yellow dots, which is the 50-day moving average. So you've got two things now working in TJ's favor to the upside, protecting his 65 strike calls, and that is the 50-day moving average and a descending upper trend line. Okay, you guys can all see that. So technically, this is an area that's going to be pretty strong resistance as price might try to head higher, maybe toward the upper Bollinger Band. Now, the upper Bollinger Band just so happens to be sitting at about 66. So that would also serve as some type of resistance for price to try to get much higher if it were to even break the trend line and the 50-day moving average. On the downside, we have, as price moves out in time, this trend line we drew is actually heading lower and lower and lower. So given enough time, but before May 16th, which was when TJ's put expires, if I just hover my mouse there, this brings price into about 43. So if I just extend this one that I drew, let me extend it to the right, and we go out to on the date, looking at the date down below, May 16th. If price continues in this trajectory along this trend line, price could get to about, it's actually now about 44.74. So that's right about where TJ's 45 strike put is. So that looks pretty safe. And if TJ had to roll that, that would be an easy roll, and he can roll it for a nice credit if he had to. But this is the way I'd be analyzing in the after. So we know where TJ's position is, but if I were to be looking to do a trade on this right now, I would be drawing the trend lines, and then I would look at the upper trend line and say, okay, well, it's got to get through 62, roughly 62, and that's going to be the trend line and 50-day moving average. I have the Bollinger Band right above at 66, So I'd be comfortable selling a 65 strike call. Then below, like I said before, if I'm going to be selling out on May 16th, I'll bring my mouse out to May 16th and say, okay, if it continues along this trajectory, it could hit 45.28. So I can sell a 45 strike put, keeping it kind of tight. It's a 20 point spread on the strangle, bringing in some good premium. And then if I had to roll, I know I can roll the put pretty easily because price would be right around that trend line area. And if I had to roll the call, I still have the 200-day moving average right above. It's a number of points away, but I also have that, which would be trending down lower too, to help constrain price if it were to try to break out of both the 50-day moving average, the Bollinger Band, and this down trend line. I know that was a lot, but are you still with me? Hello, TJ?
There you are. Can you hear me?
Oh, didn't hear you.
Yeah. I'm saying one thing to note is that not all stocks are ideal for a strangle because you're expecting some volatility. You know what I mean? Whereas with this one here, if you look at the chart, I mean, it's been a pretty tight range for 4, 5, 6 months already. Trending essentially down, but it's been in a pretty, in about that 20-point range, 25-point range. So it presented an opportunity for me with the company that I was familiar with, the company that I've had a real big position in previously. I was like, first of all, I'm very excited to potentially own some shares at $45. That was the first thing. But then also I looked at, well, who's president? He's not real big into the whole solar thing. Probably not even sold on global warming or any of that stuff either, right? He's drill baby drill. So this is not a drill baby drill company. So I'm like, I feel like there's a lot of headwinds on Enphase to go up and to the right now. But at the same time, it does make money. It's a profitable business. So I'm like, dude, this might be a situation to where I could sell this strangle over and over again for the next year to 2 years, 3 years. Potentially a new administration comes in that's more like pro solar and those kinds of things. And this could give me an opportunity to make a lot of hefty premiums along the way and eventually build a pretty solid position, lowering my adjusted cost basis, and then run this thing up to $100, $150 and make a shitload of money. But it's a 3 to 5 year play, like in my mind. You know what I mean? So, because I'm not expecting a lot of crazy volatility with this one, dude. I think it's going to be between like that 40 and like probably 70 range for the foreseeable future, unless they just knock it out of the park with earnings. But then I'm like, because this is an international company, so it's not just what's going on in this country that affects their bottom line. But I'm like, what's really going to be the catalyst, right? Like I can't find that catalyst. And we already know who the president is, and they've stabilized down here. So even if they take another leg down, this is the first strangle. I mean, dude, I would welcome a move to the 30s. You know what I mean? Like I could manage that cash secured put side of things, lower the strike price on the call to bring in more credits. And I would love to build a position in the mid 30s on this company if the opportunity presented itself.
Yeah, I mean the premiums are tremendous. I mean, I just priced it out. Right now, you can get about 335 for that same strangle. It's got an implied volatility percentile of 77. That's pretty high. And what's nice too is the volume on the stock is dried up, so it's not looking like it's going to make any major moves anytime soon. The volatility, IV is high, but the volume isn't suggesting that it's going to start going crazy. RSI is only 41. That's nice. You're not getting, you're not anywhere near overbought, oversold, so you shouldn't have any snapbacks. Probably just going to, trend within this channel and let theta just decay it and close it at a level that you feel comfortable to closing at 50%, 60%. MACD isn't showing anything off, crazy. So this is a great idea with juicy premiums.
Yeah, so that's one that I sold the strangle on. I think another one that would be fun to talk about is HIMS. Now, this is a more volatile stock. So whenever the stock is extremely volatile, you got to be ready to move. You got to be ready to move. So I've got cash secured put, same expiration date. I got cash secured puts at 22 and the call site at 39 for May the 16th. And Hims, I think there was like a bit of a short squeeze a month or two ago, and it was just going to the moon.
Yeah.
I remember Tevez was talking about it like he was ready for retirement. You know what I mean?
I haven't looked at Hims in a while, but I can't believe it's in the 20s. Holy cow.
Yeah, because this thing's growing, dude. Like this thing is growing in a very, very quick manner. Uh, I have my own personal battles with GLP-1s. I've been on it. I feel like it wasn't real good for my noggin, but I did lose weight on it and stuff. So I think as more of those studies come out and more people start, confessing that it's not all peaches and cream with taking that weight loss medication, I think that could be a potential headwind down the road, but I don't think it's going to be immediately down the road. So
Yeah, I mean, they advertise like crazy in my area.
somebody
They're
saying,
always
but no, Hims does a lot more than just that. Hims has stuff for the hair, the weight loss stuff. They got other stuff going on, but yeah, that's a very elementary analysis of Hims calling it. They're growing like crazy, man. They're making money. They're making money over there. I don't own a position in Hims. I have made money with Hims before, so I'm just trying to make money with the strangle. I'm not that excited to potentially own the shares, but if I had to, the premiums are so damn good. It's pretty easy to manufacture the win with this company.
Yeah, I mean, they're advertising like crazy in my area. I don't know if I said that, if you heard that. I mean, on the radio, it's like whatever station you change to, there's always a commercial going on. So they're definitely getting their name out there. And
Yeah.
I mean, I've noticed that actually a couple of months ago when it was actually starting to run up, and they're still advertising. So they're still, keeping their name on the forefront of this GLP-1, and like you said, hair loss for men. And
I believe the short float was really high, and there was a bit of a squeeze component that happened, and it got all the way to 70 here not too long ago.
yeah, I mean, look at that chart. That's just crazy.
Yeah.
That's huge short squeeze. Yep.
But I like where it is right now because there's support if you look to the left, right over there around the January. Like it's been at these levels, and I feel like these levels are very, very critical for him because if there's a technical breakdown or whatever the case may be, if it goes down, then you're going to have to go further left before you find more support in the teens. So I think this is a very critical. This is a critical level. This is a critical time for him to be able to hold these levels. If not, I do think that we're going to have another leg down.
Yeah, well, technically, you're sitting right on the 200-day moving average, which is the dotted line in orange. That's that's an area that it should hold up. I mean, price did penetrate it as we were selling off in the last couple of weeks. It regained it pretty quickly right the next day and has shown respect for that 200-day moving average. So that's all positive. And like you mentioned, looking to the left, we have a lot of trading history in this area right here. So, theoretically, this area should hold. Oh, sorry, that's my cat. Yeah, you have a lot of support in this area. You have the 200-day moving average. You have the Bollinger Band right below, grabbing it as well. And you sold the 22 and the 39. So let me add those here, and let's just take a look. Yeah, great premiums on this one too, for sure. Actually, let me remove that. I mean, the implied volatility on so many stocks right now is just off the charts because of the VIX, but still, it's a great time to be. That's why strangles right now are great. You can sell both sides, take double that premium, and with the market in consolidation phase right now, you get a nice data burn, and if you don't go too far out, because again, the further you go out with any type of a trade, typically the further you go out with any type of trade, you're supposed to remove risk. But in this environment that we're in, I would say keep it close. I'm keeping my trades close. So let's see, 39 here. So these are TJ's strikes. You can see just visually that his strike on the downside is closer, but that's a good idea because we do have a lot of support. We have proof that it should hold up based on previous price action. Now on the upside, he's also got a couple things going for him in that he's got the 50-day moving average exactly where the 39 strike is. He's got the Bollinger Band right there as well. And if we look to the left, we call this is a swing high, even though it's not a high level of price in the scheme of things in its price action. This is a swing where it swings and swings down here. So this is a pivot. You can call it a pivot, and it pivots right at the 50-day moving average. So if price were to shoot up based on its previous behavior, it would most likely also run into resistance, not only because you have the moving average and the Bollinger Band, but because when it reached this level with horizontal resistance, it would also turn around and head back down to do some type of consolidation. So again, this is a nice trade. Great idea, great strikes, and pretty good premiums. Let me just check the premiums on this one. Same May 16th, right, TJ?
Yeah, so I'm looking on my side. So when I sold it, I picked up $131 on the puts. So $131 times 25. And then on the calls, I picked up $66 25 times over. And I'm up 7.6% on the puts and 1.5% on the. And when I originally sold it, I put it was a 20 strike, but I rolled it from 20 to 22 because I got greedy, right? I wanted to get more premiums, but I just thought that the 20 was a little safer than the 22 when I put it on. So I went with the 20 and I got some credits out of it. And then, then I moved it up to 22, and I'm just going to kind of like toggle right there, and I'm just going to kind of do a little bit of a data burn right now because I don't think there'll be a volatility contraction with this company because and then probably volatility on this thing's been high for a long time.
Yeah, and great premiums on this one as well, and so you were actually your initial strike on the put was 20. And then rolling it up as price has kind of gone nowhere to maybe drift higher. That's great management. And another one where you've got the RSI right monkey in the middle. It's at 43. It's not showing anything like it's oversold overboard. It's probably going to remain that way, or maybe trend a little bit higher toward the 50 area, which is right in the middle. MACD isn't suggestive of anything. You have a drop in volume, so it's consolidation. Another good sign of just it's going to go nowhere because you usually need volume to get a nice amount of price increase or decrease. So you need volume, and we don't have much volume at all. So you're just going to have some type of sideways consolidation, which is great for theta burn, and especially on strangles. You're getting it on both ends of the trade. Yeah. Oh, my camera switched. Yeah, about that. My camera switched. Okay.
So I got another one for you. I've got hood, I've got 35 put, and I've got a 50 call for May the 16th. And when I started with hood, it was I think a 31 the put side, and I've already rolled it up twice. So I'm at a 30. I just rolled it right now as I'm talking to you. So I've got 35 on the put side and 50 on the call side. I do feel like I'm going to feel pressure on the 50, and that's why I'm going to keep rolling the cash secured puts and collecting as many credits as I can there. That way I could roll up the 50 to like a 55 or even a 60, even if I have to do so for debit. So that's kind of how I'm playing the hood right there. So 35 and 50, so it's a little bit tighter than the other. Yeah,
this one's definitely tighter. And you had rolled the put was at what initially?
Yeah, I've already rolled it a couple of times, and
okay.
I've locked in some profits on the roll. But yeah, so I'm sitting at 35 and 50 for May the 15th.
Yeah, this is definitely a tighter strangle, much tighter strangle. Price is heading up toward that 50 strike. Now the good news, technically, is you have the upper Bollinger Band right around there. You have a pivot area right over here, which pivoted right at the 50-day moving average. So this is proof already now that on two occurrences, back over here on March 5th. Price could not get through that 50-day moving average. It fell down, tried again to get through it. The 50-day moving average held it. So we have every reason to believe that price is going to hold it. The 50-day moving average, again, will be holding price from getting through unless some type of news event comes out. But we don't know if that's going to happen or not. Analyzing the volume, we have lowering volume each and every day, descending volume bars. So it's going to take volume to get through the 50-day moving average, which we have non-existent right now. So there's every chance that this is going to stay well below the 50-day strike that TJ has, and every indication that it's going to most likely follow what it's done every time it got to the 50-day moving average previously. The last two times is fall right from it and then head down towards support. You have a rising 200-day moving average, which is probably where it's going to test once again. And that's going to coincide pretty much with TJ's lower end strike on the put, which is 35. So again, this is another nice trade where you have everything working for you technically to keep it within the boundaries of both the upper and the lower strikes. Yeah.
Yeah, I didn't put these trades on just like, oh, let me just go look at the deltas. Like I actually spent time studying the technicals, which I haven't done in a long time. Just true story. I haven't needed to because I'm like, fuck it, I'll own these companies anyway. It doesn't matter, right? Like in my mind. But I'm like, I want to get better at my craft. Like it's cool to make a shitload of money, but everybody always wants to make more, especially after having to stroke the freaking IRS, probably another check for $250,000 here in the next day or two. Fuck those guys. I'm trying not to cuss, but the IRS really set me off right now. But
yeah, hey, no one likes that. No one likes April 15th, that's for sure.
So anyway, I want to get better. I want to get better, and I want to maximize the money that I can bring. And I just feel like fundamentals and technicals, I mean, they overlap a lot more than people want to give it credit for.
I agree. Yep.
The fundamentals, tell the story, and then these numbers, for the most part, they tend to validate what's going on with the fundamentals. You know what I mean? Like if you put like all the big events with like any of these companies, and you look at the crazy sharp price movement, it usually coincides with something fundamentally in the company anyway. Yeah.
Now, if I might interrupt you, TJ, 1 second, because what you're saying kind of correlates to what I'm about to show. So I had trend lines drawn on this when I pulled this symbol up for TJ, right? And I didn't know that TJ was going to talk about hood. So it isn't like I put these trend lines on before I came on the screen. But I want to show you how amazing trend lines are, because I'm going to just extend this one, which stopped like right about here. I'm going to extend it to show you how price is still respecting the trend lines that were drawn last time I drew them, and price is being held within the trend lines if I just extend them a little bit further than they were when I drew them initially. And I just want to finish this one off a little bit, and you're going to see how these trend lines matter. There are a lot of people that don't, they laugh at trend lines and all this other stuff, but they do matter. They do work, and it's a guideline. If nothing else, it's a guideline to help you see where price could go and where you'll find your support or resistance. So I just extended them, and what we're seeing is this trend line, which is, like I said, just extended, coincides exactly with the 50-day moving average. Price is right there, right now. It also correlates with the horizontal trend line that I just drew, which was support at one point and now resistance, and price is sitting right at that one. So we have multiple lines on the chart, confusing some people with their eyes, but if you just kind of like step back a second, you can see we've kind of have, we have this upper boundary here, the sideways boundary here, and then the lower channel this way, the lower boundary here, which price is most likely going to stay right within as we drift to the right in time, and that'll stay right within the confines of TJ's upper call strike and lower put strike. But the most important thing I wanted to show you was the trend lines that were drawn days or weeks ago for analyzing at that point are still affecting the current price as we sit today. So someone looking to put on trade on, let's say, going forward from here, can use these trend lines as well. If they wanted to look out into the future, you can just extend them and see where price would probably most likely respect the trend lines as long as some type of a news, because again, news does have a bigger effect on technicals, but that is also temporary. You might have a big move out of the trend line or maybe outside of moving averages where you would think it would be resistance or support. But news is, like I said, it could be a fading event where it breaks out, but then comes back within and stays within the initial confines of those trend lines you had drawn. So that's also something to keep in mind.
Yeah, for sure. So definitely, I do anticipate that I'm going to have to monitor and manage this particular trade for sure. So the other one that I sold was another very, very volatile one, and that is SMCI. So I went a little bit wider because there is also the outside chance of like a short squeeze with this particular company because the short float is very, very high as far as the percentage of the float that's shorted. So I did the 28 on the put side and 45 on the call side. And originally I was 25 on the put, but I since got a little bit more ballsy on that one, and I increased it to 28. So I'm sitting at 28 on the put and 45 on the call. Same expiration date, 5/16.
All right, so
picked up quite a bit of credits, 184 on the put side and 137 on the call side, 25 times over on each. Sitting on 50% on the call side, and I'm at 10% on the put side. So I've considered lowering the call side, but then there's also earnings on 4/29 according to Tasty Trade. I don't know how accurate that is, but so there's that. So I may just take the call side off completely and just rock with the puts through earnings because I like knowing what's the worst case scenario versus not knowing what the worst case scenario is, like on a naked call.
Yeah, you're definitely closer on the put side for sure. We can see that visually. And then, but you had rolled that up. Is that right, TJ?
Yeah, I rolled it up. That was at 25 originally, so this was 20 point wide. But I started picking up some more credits, and then I can always manage it, roll it back down. So I am looking to take the call side off because I'm already at 50%. But I may wait another week or so because earnings are still a couple of weeks away. So I want to milk some of that data burn, and then let it all play out, see how the earnings are. I've never listened to earnings call on SMCI, so I might invest the time to do that, get more educated on the company, and then see whether or not I really like the stock. Because right now I can't even tell you any of that stuff. That's why I'm selling the strangle. I didn't do a buy right strategy where I'm a lot more familiar with the stock. I'll go ahead and buy some shares. I'll sell some calls against those shares, turn on a cash secured put, and then run a coverage strangle versus just a short strangle. But I don't know enough about this company. I know that there was some issues with the accounting and all of this other stuff, and it was one of those modern day Enron type things potentially, but I don't think that ended up being true. So, they are in the semiconductor space. Again, I just don't know enough about the company to be that comfortable with it. So it's just a trade for me right now.
Yeah, and I agree. This one could get volatile. So I would definitely a good idea getting that call probably taken off soon. Book those 50% plus profits before the earnings. You don't want to get caught in a short squeeze. Definitely, yeah. It could break the 45 and run right up to the 50, 60 range if it has any type of positive earnings announcement. Totally agree with that. Now the 28 strike put is, while it is close, it's not terrible because you do have horizontal support that was kicked in right in January when we had a little bit of a move lower. It tried breaking through the lower Bollinger Band. The Bollinger Band held it, and that's when it ran up to the $67 price range. So you do have some horizontal support going back to January. You have some support going back to the most recent selling we had in the market, which took it down to as low as about 27.65. So that's another area that would probably try to kick in for some type of support. We do have a lot of price history in that 27 area. So you do have that going for it. You have all the moving averages above, so you don't have any type of moving average as far as
Yeah.
the 50 or the 200. And we do have a 200-day moving average, pretty much barreling down on the 50. We don't know if it's going to do the death cross and cross over. If it does, then that would bring new technicals into the picture and probably head lower as well. And that might actually correlate in time, right about the time that it's about to hit its earnings date, which is right here. And it's April 29th. So that's just something to keep an eye on. I mean, if you want to get to safety before the earnings come out, and you are seeing that the 200 is coming down to the 50, you could just get to the sidelines. I don't know how big your position is, but that might be something where you just do want to get out, and then you can actually trade it after earnings. We do that too. Sometimes we trade an earnings trade pre or post the announcement, depending on how scary and dangerous the stock is and how high the beta is. But that's just something to keep in mind. You might want to keep that in mind too, because if you do get that cross and bad news, you could be looking in the 20 range. It could test the lows over here, which was about 17. I mean, that's a pretty big drop from your price level where it is now to there. But technically, it's kind of in no man's land. There's not much. There is some support. We have 2 price points and then a little cluster of trading over here to go by. So it's got a little bit of support. It's got a lot more resistance than it has support.
Yeah.
You have the 200 barreling down on the 50. You got Bollinger Bands that are descending in nature. They're heading lower to the right. So it could drift lower for sure, especially since you have the 21 EMA in this little fuchsia colored moving average here. That's kind of been pushing down on price, and it's showing that it's respecting that 21-day moving average. So as the 21-day moving average heads lower, as it's trending lower, that could push price down closer and closer to 28. But technically, it's going sideways like a lot of other stocks. It's in consolidation. RSI is low again. It's about 45, heading nowhere. In particular, it's going sideways. So we don't have any, oversold, overbought conditions. Volume bars right here are just drying up. So there's no urgency for anyone to buy it, and there's no urgency for anyone to sell it. So it does feel safe as far as this triangle is concerned. The high short float is the only thing that does concern, but between now and earnings, even the company is most likely in a quiet period, so they really can't announce anything positive or negative. Although I'm not sure if that is the case, there is a quiet period. I just don't know how close it is to earnings.
Yeah.
So the thing you'd have to worry about is maybe other semiconductor news or other new information that comes out regarding semiconductors in general, which might send it higher or lower. But even with what Trump just did over the weekend with NVIDIA, I don't believe that had any effect. It had, looking at the price here, it hasn't had any effect on the other chips. And this is, pretty well-known name chip. Right? Oh, no, wait, this is Super Microcomputer. I'm sorry. I was confusing this one with the other stock. Yep, sorry. Yeah, this is not even in the semiconductor industry.
No, it is. It is. I think super microcomputer is somehow related to that industry.
Yeah, maybe it is, but it's not like the manufacturer or like NVIDIA, right? Yeah. But technically,
I don't know enough about it. I'm just very, very familiar with the price tax. I mean, this thing was like a Wall Street dandy a year and a half ago, 2 years ago, and then that whole thing happened. That whole thing happened and there was also a split, I believe.
So here it is.
Happened with the accounting, and they failed to report on time and all this other stuff, and they kind of like fell from grace. A lot of the big money, probably pulled out because they're obviously there's a lot of people that have been burned before in the market, on this kind of thing. So they kind of shied away. But yeah, I don't know enough about the company. I don't know much about it at all. So this is just more of a price action play and just being familiar with the ticker. And I felt like at this juncture, I could take that trade and make a little bit of money and kind of like invest and then investigate type thing.
Yeah, no, I do that too sometimes. Sometimes what they do doesn't really matter, but I just wanted to see for my own self because I said semiconductors. It's actually not, right? So it does server and storage solutions. So yeah, it's got nothing It's got nothing really to be concerned about with any type of impending news with.
There we go. This
means-
person right here. SMCI makes the racks that hold the NVIDIA chips. There you go. So Maria says, I've done a few cash grabs via SCSPs on SMCI. Great premiums 27 and 29, waiting for earnings. So I like that. This is what's great about the community is people can help you. So she's 27, 29. I respect Maria a lot. So where are my strikes at? So I'm right in there. So I feel a lot better about it because
you're right in the middle.
She doesn't put her money to work unless she's more familiar. You know what I mean? Where I'm a little bit more gambly, if you will, when it comes to that. And then I can always just roll the damn thing and call it good. I don't have to be right now. That's the thing, right? Like I need to put that on a t-shirt. I don't ever put myself in a position to where I have to be right and I got to be right now because that's how you blow up your account. So, be careful with that too. So I got a last one, dude. Tesla. Put Tesla up there, my man. And let me walk you through the entire trade because Tesla is the one that could potentially blow up the account because of the way that I'm choosing to play it. And I'm going to be very, very careful with the way I tell y'all that. It's the way that I'm choosing to play it. Like I am willing to take on all this risk because I'm net bearish on Tesla right now for like the next 90 days or so. But ultimately, I'm like super bullish on Tesla. And it's okay to be bearish from a price perspective on Tesla. I think that until they deliver on a lot of these promises, it's going to be real hard for them to continue to command this type of multiple. So what I have is in the short term on the call side, I've got the 275s for March or for May the 16th, and I've got the 300s for May the 16th. And the 300s are all naked. The 275s, I own those shares. So I have 65 contracts for the 6,500 shares. And but the 300s, I've got 470 of those at 300 for 516. And I'm already up. Let me look. Let me do. So I'm already up 28% on those. On the naked calls, and we do have earnings, I believe, on 422. So this is something that I'm probably just it's just so hard because I feel like Tesla's gonna tank on earnings, but at the same time, it could easily go to 400 as well. So it's one of those things that I don't know if it's worth it. I may just want to be on the sidelines on the naked call side of things for Tesla. So I've got 275 and 300, shitload of contracts, 65 at 275, 470 at 300, and then I also have 470 cash secured puts in the distance, January at 175 and 200.
I'm sorry, what's the right puts, TJ?
175 and 200, but those are for January.
Oh, okay, gotcha.
Yeah, because I'm trying to make all that money because I'm like, if I get in trouble with the naked calls, well, I'm going to go make a shitload of money on the cash secured puts, and I'm already up 25% and 8% on those.
I'm just going to put in the 200s because they come up closer than 175. So here are the strikes that TJ has: 275, 300, and then there's 200 on the put side. Now, technically, Tesla is in a quagmire. There's a word for you. It's in a quagmire. You've got a few things going on. We just had a death cross in the past couple of days, which is the 50 crossing the 200 to the downside. So historically, that indicates lower prices. Now, they don't always work that way. You can get a quick turnaround. Being that earnings are coming, if they have great earnings and positive news, you can sometimes get a death cross, which turns right around. The 50-day moving average turns right around, recrosses the 200 to the upside, and all is great in the world again, right? But technically, the 50 crossing the 200 is never good. Price typically does drift lower, and sometimes it gets pretty ugly as it trends lower, and it can have some spikes down. But that's not a guarantee, but that's typically a technical event that does happen when you get a 50 crossing a 200 to the downside.
Right.
Now, we also have a descending trend line, which was previously drawn on this chart as we just opened it. I was working with a client who's in this stock, so We were analyzing it for that person, and this descending trend line has been holding up on multiple touch points. You've got, you got one there. I would call this another one. It was an attempt. It didn't have enough strength to even get there because you had the moving averages along the way too, pressuring it. But let's just call this 2, and then 3, and then 4, and then we can call these maybe 5 and 6. So it's got multiple touch points on the trend line. That's what I'm trying to say, and that means it's a pretty strong trend line. It's descending in nature. So it's going to take a lot to get through it. It could be something along the line with tariffs. It could be anything, but it's going to take a lot to get through it. And then when you get through that, you then have to get through the 50-day and the 200, which are barreling right down on everything. The good news for TJ's call strikes is that they're most likely safe because of the things I just mentioned. But if someone's bullish on Tesla, those are the caveats to be aware of, because they say nothing really good happens under the 200-day moving average, and the problem is that it's broke the 200-day moving average back here, or let's say on March 5th. Its next attempt to get through it was a failure. It made multiple attempts to get through it in 2 or 3 days in a row. It could not do it. It regained itself, and then tried to do it another time. Couldn't do it. So the 200-day is showing to be formidable resistance. And now you're just dealing with this trend line as well, this descending trend line. So from a technical perspective, I would definitely be looking short on this if I were a directional trader. But again, news could trump technicals in this case. And if we get tariff positive news, and if they have good earnings, or they talk about good earnings in the future based on whatever they might come up with, that could turn it into a bullish scenario. But to be honest, what I see in this one is just a continuation of attempts to break through and failing. And then the problem would be earnings. If they suggest that, we've had poor earnings based on all of the events going on at Tesla dealerships, and all of the crime going on, that they haven't been able to sell vehicles. They haven't been, people haven't been able to get to the dealerships to buy cars. They've they're taking a hit. They could say that it's going to affect the next quarter, and then we have the 200 and the 175 strikes that might come into play for sure.
Yeah, but those are obviously for January.
Yeah.
So so I've been looking at the chart, and I think the chart definitely looks bearish to me. And I'm like, so it's real hard for me to not want to just grab all this quote unquote free money from these naked calls, And so I think I'm going to leave them on at least through this week, and then part of next week. If I can approach that 40 to 50%, then I'll consider maybe taking half of them off, and kind of locking in that win, and then monitoring the others. I would feel better if the strike price was at 325, which it used to be, because I have that, because then you have that 38.2%, which is, I guess, the Fibonacci level.
Yeah, I forgot to even mention that. You do have the Fibonacci level lining right up there with the 275.
Yeah.
And again, being that you're in a downtrend at this point, typically if there's any type of retracement, the furthest it gets up is about to 23%. Maybe you'll get to 38%, but most likely it stops at the 23.6% Fibonacci. So, yeah.
The 275 don't stress me out because those are covered, right? And then I bought the shares at 261. So I'm like, here they are for 275, and I can always go make that money back on cash secured puts. This is Tesla. This thing's going to do crazy shit for the next 5 to 10 years probably. But I think earnings are not going to be great. I think we already know that, right? Because deliveries aren't great. But it's all going to come down to the guidance. And then what kind of call is it? Is it a positive call? Like, hey, this is where we're at, but you're betting on us because of the artificial intelligence and the robotics and everything else. And it's like, is Elon going to really keep selling this story? He's going to tell the story, but the thing is he's telling the story. Like, in other words, are we buying? And if we keep buying it, then I think that the market could easily disregard the negative earnings, the negative growth, and then just be like, we're betting on FSD, we're betting on robotics and all that stuff. And then people are going to want to be in because it's going to be at $2,000 a share in no time and all this other shit. So That's why Tesla is my favorite stock, because you talk to 100 people, 50 people are like it's extremely overvalued, and 50 people are like it's extremely undervalued, and that's what makes the market. it's and that's what gives us all the volatility we need as options.
Yeah, and I just noticed all the way to the left. I noticed that there were a lot of puts being put. I think we talked about it last time. There were a lot of puts being traded in the 150 range a couple of weeks ago, and that does line up, especially with an open gap on the daily chart in
Yeah.
that 150 range. There's an open gap to the left over here, created on an earnings event back in April 23rd of 24. Where on negative news, there is a chance that it tries to address that gap. I mean, that'd be a pretty big drop, but in time, it could get,
I really would love to grab another 3,500 shares in that range.
yeah, that would be a scoop. That would be a great scoop right there, 150. And you could even have well, that's true. You'd be doing options trades, but
Yeah.
if someone wants to trade it from the equity side on earnings, you could throw yourself out there a bid on in the equity side, leave it good till cancel, and on a flash down in price, you might get filled if someone wants to try something like that.
Yeah, so we'll see. I'm excited about it, but that's pretty much all that we got, man. I'm kind of doing, yeah, like right here, Mr. International. Really difficult to value.
250 face value, fair value, yeah.
But I think that is why Tesla is so compelling, because you have so many people that are absolutely convinced. How do you define investing, right? Is like the present value of all future cash flows. And if you have that mindset that 5 years from now, Tesla's going to be the most valuable company in the world, which I'm in that camp, by the way, because I had them by 2030 that they will be the most valuable company in the world. And if you see that clip where full self driving takes them to 5 trillion, robotics takes them to 25 trillion, and right now Tesla is what, maybe a trillion or so if you look at the market cap. I don't know. I don't even know where the market cap is right this second, but it's like, dude, that's a lot of upside if you believe the man, right? And I definitely don't want to be betting against Elon, but at the same time, I think the market, like even like retail, like we just said, with all these tools that are available to us, retail gets smarter and smarter, right? Like they learn how to value companies, and they learn how to value stocks. And I just feel like Tesla is going to have a hard time going up and up and up. Like it's gonna have to earn it. It's gonna have to come in with the numbers. Like I don't think that the story in and of itself is gonna be enough to move the needle anymore to that degree. In my opinion, again, that's why I say I'm short term bearish but long term bullish. Because I just don't think that we're in the kind of market where you can just sell us a good story.
Yeah, and I mean, I don't want to bring up negativity, but with Tesla, when we were trading up in the range of, let's say, 350 and heading higher and breaking out to the upside here, who would have thought that this gap that was open from this earnings event back in October of 2023, 24, sorry, who would have thought that it would be getting filled? But look, price, lo and behold, came down, and here's where it filled the gap right here. It did close this gap. So the other gap we do have to fill is this one we just talked about at about 150. And price is not too far away to get that taken care of, and then it can begin maybe a new longer term trend higher. I don't know the percentage off the top of my head of what percentage of gaps, open gaps on the daily charts close. It's probably 70% or higher that they close. And this was even one on a strong name, which looked like it was heading to 1,000, right? $1,000 a share.
Yeah.
I mean, there's a good chance that 150 gets filled. I mean, I hope not for the longs, but if you're looking to get long and you're not long yet, that would be probably a generational buy as long as Tesla doesn't, self implode, or Elon Musk, changes direction and I don't know. I'm just thinking out loud. I mean, that would be probably the buy of a lifetime, 150.
So I think he's talking about like when we were either on SMCI or Hood or something. You said that put is easy to fill. It's because first of all, the strike price or the share price is above that strike price. So as soon as it touches that strike price, any cash secured put, especially when you're dealing with the stock that has real good volume, any cash secured put is pretty easy to roll, and you can get some pretty decent credits because you're not underwater yet.
Exactly.
Like whenever you're underwater, guys, it's a lot harder to roll for credits because it's like swimming. It's like the deeper you are underwater, the harder it is to come up for air. And if you go too deep underwater, you run the risk of drowning, right? That's just the reality of it when you're swimming.
That's it in a nutshell.
It is when you're selling cash secured puts and you're underwater. The deeper you go underwater, the chances of drowning increase. So,
yeah, and a lot of times, if you are underwater, you can. I mean, the ideal situation, Doug, is to try to roll it out and then down in price,
right.
so that you can actually now support your position even better. But sometimes, like TJ is saying, you're so far underwater that the only thing you can do is roll it out. But the good news is you can usually roll it out and get a credit. You may have to go further out. I mean, sometimes you may have to go so far out you don't even want to do it. 3 months, 6 months, or a year, but if that's going to help you manage that position to positivity and make money on it, it's many times worth it because it's more money that you would make in the end than if you put your money in a risk-free equivalent, like T-bills. If T-bill is going to make you 4.5%, but you have to sit in a cash secured put and roll it out for a year and make 15% or 10%, it's still better. It's still a better trade-off.
Absolutely. Well, I got to run, man. I got to run. We've got some errands that I got to run with the wife today and stuff. And then I've got a couple of FaceTimes that just showed up on our calendar. But anyway, I appreciate you, my man, and we will do this again next week.
Yes,
I am
sir.
looking to have an episode of Wheelers this week again. And then I am looking at a new segment late at night, like around 11 or 12 o'clock at night, just for like an hour once or twice a week. So I'll be looking for a panelist that are not big sleepers like me. I'm not a real big sleeper. So sometimes my WhatsApp group is blowing up like midnight. So I'm like, maybe we could just be going live a couple of times a week and just kind of like, what do you do? Because I like looking at the numbers when nothing's moving, like I like looking at the positions when nothing's moving because that's the easiest time to really analyze where you're at because you don't feel the pressure of the market.
Yeah, I'm not an early morning person, so I'm not the guy up at 6 or 7 o'clock looking at charts. I'm more. I do my analysis more so at night.
Yeah,
like you said, everything's quiet, nothing's moving. Although the market is trading, but it's just a better time for me. I'm a night person.
Yeah, me too. I'm a night owl. So anyway, we'll see. I'll announce that here pretty soon, but I'll definitely need a couple of people that can help me out at that hour. Like I don't want to be trying to carry the show on my own at midnight. But anyway,
Right.
TJ Will Joe signing off with
Good.
options. Check him out on X, and then you want to tell us a little bit about your Patreon as well, Uzi?
Yeah. So I do run a Discord. It's a premium selling Discord. We trade everything from options on stocks, futures, indexes. We trade SPY, we trade Qs, TQQQ, IWM. So we trade ETFs, premium selling mainly, and we got a great bunch of traders in there, and we keep it fun, but we're all business. We're there like TJ. We want to make money, get our cash grabs if we can. We do some wheeling, not anything to the magnitude of TJ, but we do some wheeling because you can make good profits with that, and you can make some good percentage gains. So we do that, and if you don't stop by, you can hit me up on Twitter, and I'll hook you up, being that you're part of TJ's YouTube audience, and I'll give you a free trial.
Awesome. Appreciate that, Uzi. Appreciate that.
Yeah, my
TJ Will Deal signing off with UZI Options. As always, may your sky stay blue, stock screen. Peace out.
All right. Thanks, everybody. Thanks, TJ. I'll see you soon.
Take care.
Okay, buddy.